Yeah.
Okay, can you see the presentation? Can you see the presentation? Let me click on here, got it.
Yes.
All right, so thank you, Penny. All right, so welcome, good afternoon. We're gonna be discussing deposit disputes when there is no deposit. How many times have we come across a scenario when you represent the seller, right? You represent the seller, and part of the agreement, right, is that if you accept an offer, that the buyer initiate a deposit, right? Typically, when you see on the purchase agreement, right, you'll see that the buyer's submitting an offer at X price with a down payment, but also an initial deposit. And once it's executed, right, when the buyer and the seller execute the purchase agreement, congratulations, you open escrow. Now, this is where it gets a little bit interesting, right? When the deposit is not in escrow. Okay, what happens next? How do you navigate this process? So that's what today's topic is. When the deposit and there is a dispute, but there is no money in escrow. Because remember, at the end of the day, is the buyer committed to purchase this property? And obviously the seller is in a position to sell the property to this particular buyer, right? And ultimately, the way we think is, in order for the buyer to be considered, the buyer also has to have a little bit of what we call skin in the game, right? And that skin in the game is what we call an initial deposit. In case down the line, the buyer decides to back out of the deal, cancel, right? And the buyer has released all contingencies, then the seller has some right of damages. And this is the reason we go after a portion or everything that's in escrow, the deposit. Now, what is the maximum amount of money that a seller can get from the buyer's deposit? Anyone know?
3%.
Yeah,
3%.
3%. Absolutely, yes. That's basically the total amount that the seller can go after for damages. Now, with that being said, folks, part of that 3% is the buyer can still dispute that and says, well, Mr. and Mrs. Seller, explain to me, break it down to me how $30,000 of the buyer's deposit, right, is considered damage. What did you ultimately lose from this transaction that's going to cancel, right? And the buyer can come back and argue that fact. And remember, at the end of the day, folks, it has to be agreed upon between the buyer and the seller. And if there is no meeting of the mind, unfortunately, the money and the escrow will become a neutral party and will not release the money automatically to the seller just because the buyer had breached the contract and the seller believes that they've been damaged. It has to be agreed upon. And if there's no meeting of the mind between the buyer and the seller, then we must mediate. And if we cannot settle on a mediation, we must arbitrate. And if we still cannot arbitrate, then ultimately ask the buyer and the seller, speak with an attorney and get legal advice how we can maneuver this angle. And this is when we basically clean hands, back out of the transaction and let the buyer and the seller dispute it. This is nothing that we have to be involved in. Does that make sense? Okay. So deposit disputes when there is no deposit in place. All right. Disputes, even though a deposit is not required to create a binding real estate contract. Interesting, right? We always under the impression that there must be a deposit in escrow for this to be valid. Well, here's your answer. It is not required. It is not required. Most sellers will insist the buyer make a deposit to put some skin in the game to demonstrate the buyer's what? Good faith. Good faith. Okay, and the intention to proceed with the transaction and provide the seller with insurance that the buyer will perform. Interesting. I think we all learned something new today.
Yeah, I mean, this is something.
Now, let's be honest and let's be frank on this, okay? Now, let's just say, and all of us are all going to play the listing agent on this, okay? So all of us on the call, that includes everyone on Zoom, you're all listing agents. So congratulations, you just picked up a $5 million listing. Yay, okay? But what this illustrates to me is that, you know, that the buyer doesn't necessarily have to put a deposit in order to open escrow. As long as the buyer and the seller agree, execute the purchase agreement, we can open escrow and we can close escrow and the buyer can buy and the seller can sell and then transfer of ownership. Now, let's be frank and let's be honest with ourselves, you know, especially right now, right? More so with multiple offers, over asking, buyers to release, you know, certain contingencies. You know, will you be considered, or will the seller even consider in taking an offer without a deposit? Probably not. Probably not. But here's what it says, that even though it is not required, okay, and the requirement comes from the seller, and it's been customary for us, and it's been embedded in us that there has to be a deposit. And the purchase agreement clearly says, you know, what is the buyer's willingness to put some type of skin in the game, right? Some time. Now, can $1 be a valid earnest deposit? The answer is yes. Can a $10 deposit be in good faith? The answer is yes. Okay, but it also says that zero money can also be a contribute that both the buyer and the seller can agree to. And that's perfectly fine. But here's the flip side to that, okay? If the buyer and the seller agree to those terms, right? Then what happens is if the buyer decides to back out of the deal and the property has been held from being active in the multiple listing service and not provided an avenue for other buyers to you know, have it as a backup offer, then the seller really doesn't have any recourse to go after for damages, because the buyer and the seller agreed in the very beginning that they were not going to consider it a deposit. Okay, so that in a nutshell is the specifics of how this works. Okay, and again, feel free to ask questions as we chuck away. What happens if the buyer does not make that deposit, right? That's what the whole purpose of today's presentation as a promise. Well, option one, seller give the buyer what's called a notice to perform, form NBP. Once the notice buyer to perform is delivered, the seller can cancel if the buyer does not make the deposit within required amount of what, 48 hours. 2 days. Even though the buyer is in breach for failing to make the deposit under paragraph 14 of the purchase, is obligated to return the buyer's deposit anyways. Well, if there's no money in escrow, how is the seller going to release deposit? Obviously not. We just canceled and we explained that there was never a deposit. Therefore, it gets canceled on. The seller now puts the property back on the market and we find another qualifying buyer. Now, in essence, if there was some type of deposit in escrow, right, then ultimately the protection that the buyer has is that if the buyer doesn't go through with the process, the buyer has the right to exercise paragraph 14B of the purchase agreement, meaning that the buyer in its due diligence period can back out of the deal. And it can be that the house smells funny, or, you know, after doing a home inspection, the home inspection report comes back with all this laundry of items and the buyer just feels compelled that it's just too much to take on because all properties are sold in its as-is condition. Meaning that the seller does not have to respond to the buyer's request nor fix anything, nor give any credit, nor do a price reduction. Interesting, right? Very interesting. Okay. So even though the buyer is in breach of failing to make a deposit under paragraph 14, the seller is obligated to return the buyer's deposit anyway. Since the deposit was never there, no further action is required. And that should be the end of it, basically. Okay, as I say, you clean your hand and you move on, as long as you have paperwork or paper trail to back up your argument. Because again, what can the buyer come back and say? Well, I never officially canceled. If the seller didn't go through the proper channels, right? The notice to buyer to perform, okay? And you got to understand, there's elements to all this. This is why we have timelines, ladies and gentlemen, timelines for all this to work and play out. And either, right, either the buyer or the seller doesn't perform, the other party can send out the performance. Seller to perform, buyer to perform, okay? So, it gives the seller the unutilized contractual right to cancel in exchange for giving up the right to the deposit to avoid a dispute over whether the buyer breached material and therefore justifies a cancellation. So this is a justifiable claim against the buyer, failure to perform. Okay, this is part of the process that allows the seller to cancel with this buyer and nothing further to continue. Okay, we're done with this buyer. We're going to go and put the property back on the active market and find another qualified buyer. So the essence of this position is, let's say that you accept the offer, right? The buyer has 48 hours to go into and wire money, deposit a check into escrow. What if this happens over the weekend? Let's say this happens on Friday, right? And then Friday, Saturday, and Sunday would be considered what? 48 hours, right? Well, is escrow open on Sundays? Probably
No.
not. Okay. So what happens is it reverts back to the next business day. Okay. Now, what if Monday is a holiday? Then what that means, it reverts to the following business day after the holiday. So weekends and holidays. Okay, so that has not changed in the years that I've been doing this real estate. So I hope everyone kind of understands how this all works. Okay, so if the seller sends out the notice to perform, the buyer has 48 hours to perform and get that money into escrow. What happens if the buyer at the last minute sends out the deposit in escrow, and you don't get the form or the deposit to the following day? You know, does the seller have the right to cancel? Well, it really depends. Okay, so I'm a true believer to what we call, you know, the spirit of the contract and basically the spirit of the law. You know, you have to be able to give and take a little bit, and sometimes in these circumstances you may bend a little bit in order to facilitate this, because at the end of the day, folks, in my personal opinion, what is the win here that we all want to accomplish? Close the deal, right? You want to close this deal and not start over. So again, it all really depends, but it's your job and your responsibility to have the conversation with the seller and explain the pros and cons to it. Because here's the big picture. I'd rather focus on closing with this buyer than start over. It doesn't matter if it's in the beginning, in the middle, or towards the end. No one wants to start over again and now go through the motions of putting the property back as an active, finagling offers, now presenting the offers to the seller, X, Y, and Z, right? And now accepting another offer and going through that same motions, right? If you can hang in there, then hang in there and just work and finesse and ultimately finish the transaction and get the buyer and seller to close the deal. That's my personal opinion, okay? But I've come across scenarios where, you know, the buyer fails to perform, and then the following day the money is in escrow. Well, if the buyer has breached the contract, right, then ultimately the seller has the recourse and the avenue to say, yeah, you know what, we're going to return that money back to you, but we're going to cancel and we're going to put the property back because the buyer did breach the contract. And the seller has the right to do so. So again, just looking at the pros and cons on this. Question, yes.
So what if the seller, as it says, the little deposit, like you said, like $10 also considered as a good bit, right?
Yeah.
But, and it says within 48 hours, even like he promises to bring that good faith money 48 hours or not. But if the seller says, okay, if he's interested in the property and the seller is agreed to wait, it leaves about a day to give him a chance to bring the deposit. Is that still the seller can consider that buyer?
Yeah. So that's a very good question. Here's what she was saying about was the deposit. What if the buyer needs a little bit more time?
Yeah.
They were on vacation. They submitted an offer via DocuSign. Agent sent it over to the buyer executed the offer and then submitted, but it was the same time they're on vacation. And they're in a remote area. If your clients, and I mean the buyers, if your clients know that they're going to be available to wire the money or deposit the money within 48 hours, first and foremost, you need to let your agent know. Okay, they need to let you know, hey, Simon, I don't know if I'm going to be able to meet that deadline of 48 hours. We may need an extension of time to do so. This is where you as a real estate professional need to do what's called the extension of time. The extension of time, Form ETA. In this form allows the buyer that extra time to be able to put in the deposit before the seller sends you the notice to perform. You don't want to get the notice to perform because once it's sent out, it's a ticking time bomb, meaning 48 hours comes up, seller has the right to exercise their position and counsel with you. And if this is the property they've been wanting and it hits all the bells and whistle, then it puts you in a very bad position because you were not on top of your game. So I want to urge each and every one of you that if you're in a situation where your clients are out of commission, on vacation, in a remote area, very limited receptions, they cannot wire money, then you need to be proactive and say to the listing agent, you know, hey, we're going to have some challenges. My clients are solid, but we are to put that deposit. Here's the reason. And, you know, have something to prove, you know, here's a flight that my clients left, something documenting the proof why the buyers cannot facilitate the deposit into escrow.
The proof can be even the funds.
Well, of course, but remember, it's not the proof of the funds we're arguing, it's the proof that the buyer did not put the deposit in escrow. Okay, because they're out of commission. Exactly. Exactly. Yeah. Two different things. Yeah, you know, one of the things as a listing agent, and as I said to everyone here, you're all listing agents facilitating a listing for $5 million. The question that was thrown by one of my agents here is, you know, the proof of funds. Yeah, absolutely. Part of the process of determining if your client is going to accept this buyer is you want to see all the avenues of the proof, right? The proof that they can commit to this. One is the pre-qualifying, pre-approval, right? Or the DU approval that they've been already pre-approved for a loan. That's number one. Number two, if they're putting a substantial down payment, even if it's an FHA, a VA, or a conventional loan, or even cash, we want to back it up with some sort of proof of funds, right? Meaning, do you have the backing to support your position when submission of this offer? You know, they're putting 20% and that's $200,000. Show me the proof. Now, with that being said, you also got to look at every element of that proof of funds, because if they only have 200,000, they still have to take into consideration closing costs. So do they have more than exceeds than that? Because what if the appraisal comes in and it appraises for a lot less? Now you're in a very tight scenario, tight situation. And this is why you have to make sure that you look at all the financials. And also with that, ask questions. Ask a lot of questions to the buyer agent. Well, is this all the proof of funds? Because based on the calculations, 20% of the putting plus, 2% of closing costs, it looks like it's going to be very tight on all this. What if the property doesn't appraise right now that we're seeing all this multiple offers as well? Ask those questions. Because maybe she or he failed to provide you. Oh, sorry. Yes, I mean, you're 100% correct. Here's another $500,000 bank account that I failed to put on as part of the proof of funds. Okay, then that covers your scenario, covers your position. Remember, because all of this is going to be presented to the seller. Now, at the end of the day, the seller makes the ultimate decision, right? The seller is the one that's going to say, yeah, I'll consider A, I'll consider B, or I'll consider C. But there has to be one that they have to accept because that's the one that's going to go into escrow, right? So either A, B, or C, okay? Or they can just say, I'm going to pick and choose, and boom, wherever my finger lands is the one we're going to. Just kidding, okay? That's not the way we practice real estate, right? It's the most qualified, right? The most qualified buyer, meaning price, terms, and conditions, right? Highest price point with the least amount of terms and the conditions. What are the conditions that they're willing to give? Are they willing to give the seller, seller in possession, giving them what we call rent back, right? Or a quicker escrow or a lengthy escrow because they're buying their up-leg purchase. So whatever that looks like it has to be in favor of the seller, right? And it's not always the price, right? It can be, terms, the terms are reasonable for the seller, and the seller says, look, yeah, I can probably pick A as the best highest price, but I'm not looking at that. When I met the family from offer B, it really resonated because I want to sell it to a family because we've lived here for 25 years, so we want to find someone similar. And that might be the emotional aspect that the seller decides to go with a lower price point. At the end, it's whatever the seller is willing to take. It's not always the highest price point, folks. Okay, so just to kind of let you know. All right, so deposit avoided. Okay, so under paragraph 14, provide a trade-off. If it gives the seller the unilateral contract right to cancel in exchange for giving up the right to the deposit to avoid a dispute whether the buyer breaches immaterial and therefore justifies the cancellation. All right, option number 2, seller can do nothing and find out if the buyer closes escrow, right? If buyer closes, fantastic, right? That's the end goal, right? Let's just say we just go with the motions, buyer never puts a deposit, right? Because what did we hear earlier? We heard that we don't have to have a deposit in order for us to open escrow and close. As long as the buyer is legit and is willing to close, it doesn't matter. It doesn't matter what the terms are. Seller doesn't have to accept a deposit. And where we see this quite often is interfamily transactions, family to family transactions, okay? That's when we really see no deposits because they're selling it from a parent to a child, brothers to sisters, family members to family members. Then usually they don't put a deposit. They just open escrow, go through the elements, and then close. They get the loan, they qualify. There's no need because it's inter-family transactions. But when it comes to the real world, as we deal with so many buyers, so many sellers, then that changes the trajectory of how we do business, right? And ultimately to give the buyer and the seller the opportunity, that's when you want to have some type of deposit in escrow for that purpose, because you don't want to drag this escrow for 30, 40, 50, 60 days, and the buyer decides to back out. The seller did all these repairs, and now they're out of pocket. Yeah, you can put the property back on the market, yeah, but there was some damages. The seller didn't have to do any of the repairs, but in good faith, because the buyer was requesting that, the seller did so. But there's, again, that's a different conversation that we can go in deep and spend an hour just with that. So I'm not going to go too much into that. So if the buyer closes, and it's great. If the seller can give the buyer a demand to close escrow form DCE, If buyer does not close in 3 days, seller can pursue the buyer for damages for the buyer failure to close. So let me explain this form, okay? Because I get a lot of confusion when it comes to this form. The confusion that we get is, do I send the demand to close or do I send the notice to perform? It can be a little confusing, right? So let me make sure I'm crystal clear in this position. The DCE form is only given at the time of close of escrow, meaning that if the date of close of escrow is May 15th, and the seller, and the buyer has not performed or closed on May 15th, has not asked for an extension of time to close, then that's when the seller can send the demand to close on that date or 2 days prior to the date, but it still gives the buyer 3 days to perform, okay? 3 days to perform. Now, with that being said, it's 3 days, 3 calendar days, not 3 business days, okay? So if this happens to fall on a holiday or on a weekend, then the seller has the right to cancel, the right to cancel. Pardon me?
Calendar days, right? Or
Calendar days, yep. DCE form is calendar days, okay? Notice to perform to release contingencies are business days, and if it falls on a weekend or holiday, it reverts to the next business days. But the demand to close is 3 calendar days. If it falls on a holiday, falls on a weekend, then the seller has the right to cancel on that, okay? Any questions regarding demand to close? Seller cannot pursue the buyer for damages for failure to close. So yeah, you know, again, the pros and cons, and this is why you want to have a little bit of skin in the game, right? The reason you want to have some skin in the game is because of these situations. You don't want to tie up the property for 30, 45 days, right? And then find out that the buyer doesn't qualify, okay? That's a problem, that's an issue, because who do you think is going to be upset with you? If you're representing the seller is going to be pretty upset, you know? Now, do we have control over the buyer? No, we have no control. And this is why the buyer has rights just as much as the seller has rights, okay? The question is, are you on top of your game on this? Okay, are you on top of your game and utilizing the tools that you have, which the contract defines your position, the seller's position, and also the buyer's position. It is up to you and making sure that you got the proper documentation in place. That's simple. It's not rocket science. It's just common sense. Okay, this is why we have these forms to protect all parties. What happens if there is a signed liquidated damage clause and buyer does not make the deposit? All right, I think it's page 6 or 7, 5, 6 or 7 on the purchase agreement that has mediation arbitration, but it also has a language that says about liquidated damages, right? So liquidated damage clause only allows, and hear this very clear, only allows the seller to pursue the deposit actually paid by the buyer. If the buyer put 0, settle, no dinero, and escrow, then unfortunately, there's nothing you can do for liquidated damages. It caps at 3% of the price for residential property the buyer intends to occupy, right? You can argue if no deposit is made, the liquidated damage clause is invalid and of no effect. The seller, after following the notice demand to close process, should be able to pursue the buyer for actual damages resulting from the buyer's wrongful failure to close. If a court agrees with it, it may, under the general rule, the buyer cannot take advantage of the owner's wrong failure to make the deposit. In this case, the damage amount would not automatically be set at the would-be deposit amount, and the seller would have to provide actual damages, such as the difference between the contractual price and the price for which the property eventually sold. Now, I'm going to go in deep into this because this has a lot of nuggets, in my opinion. The nuggets that I get from here is going back to the deposit, right? If the buyer failed or the buyer never put a deposit into escrow, right? Again, what can the seller do? We talked about that. The seller can go back and say, Mr. and Mrs. Buyer failed to put on the deposit. Here's the notice for the buyer to perform. You got 48 hours to perform. And after 48 hours, we can cancel on you. That's option one. Option two, buyer doesn't put any deposit. Seller says, look, I'm okay with it. You know, I'm not worried about the deposit right now. I'm just grateful that I got an offer in. I want to close because I need to be in Florida. Okay, I'm ready to retire. I want to be in the Caribbean. So I want to scuba dive for the rest of my life, right? And look at fishes, you know, whatever the case may be. So we go with the motions. The seller and the buyer agree to the escrow for 30 days or less, right? And ultimately, at the very end, on the 28-29 mark, buyer backs out. Okay. What this language says, if the buyer signs off on the liquidated damage clause, right? Then what can happen here is that the seller can now say, I've been damaged. Okay, even though there's no deposit, technically speaking, we would be able to go after the deposit, right? 3% of the purchase price, right? So if it's $1 million offer, then 3% of that is 30,000. So technically speaking, the seller can go after 30,000 if they have the right to, right? If there was a deposit. But we are dealing with the buyer that never put a deposit. So how can we go after damages if the deposit was never in escrow? Well, what you need to do is follow the protocol and the procedure is, okay, if the May 15 is the close of escrow, then we must, as a listing agent, send out to the buyer the demand to close escrow. That starts the 3-day provision, right? Day 1, day 2, day 3. Now, I get this question asked all the time. Simon, when does the 3 days start? Well, it starts from the moment that you submit the paperwork. So how it works is, folks, is very simple. If I execute the demand to close today is considered 0 days. Every day, the day that you submit this form is the day that is considered 0 days. So the following day is the day 1 of 3 days. So let's just do the math on this. If I send the demand to close today, which is Tuesday, right? Today is considered 0 days. So tomorrow would be 1, Wednesday, 2, Thursday, 3, Friday. So by Friday, if the buyer does not perform, then we have the right to cancel escrow. I hope all that makes sense. Now, what's so interesting about this provision here of the liquidated damages is that if the buyer failed to put a deposit, or the seller didn't care, well, the seller may still have rights for damages under the provision. Now, with that being said, this is why you got to be very careful. And I see this quite often when representing attorneys. Attorneys do not like signing off the initials on the liquidated damage provision, because now they're held accountable to that if they breach the contract. That's why if you ever work with an attorney, you'll see, they'll say, I don't want to sign that. Okay. Some do, most won't. I've seen that personal experience, and they come to me, Simon, my buyer doesn't want to sign the liquidated damage provision. And right away, are they attorneys? Yeah. How did you know? I don't know. It's just magically came into my head. But yeah, attorneys who are buyers and sellers typically do not want to sign on this because they know the aftermath of this. So just again, word of advice here for you. So going back to the liquidated damage provision. So say that the buyer did not perform at the 28th day, cancels, right? And now the seller is like, man, you know what? I wasted 30 days and, I lost my deposit on my purchase in Florida because this buyer did not perform. And I had $50,000 because I was buying that $5 million property overlooking Miami Beach. I lost the $50,000 because I was in breach of the contract because I couldn't perform, but I needed the proceeds from the house that I'm selling to this buyer who did not perform. I've been damaged. Okay. Well, now we have to, as agents, back out of this deal. And unfortunately, they need to speak with an attorney. The attorney will advise them if it's a small claims court, then they'll go to a small claims. But if it's more than, what the small claims is, and I believe it's $12,000, I can't remember the amount, but if it's going to exceed that, then I highly encourage them to speak with an attorney. The attorney will review all the documentation, and if they find that the buyer did breach and did sign the liquidated damage provision, then they can go after damages and monetary damages from the buyer. And have to go to court. Obviously, they'll try to settle before it goes in front of a judge, because it's like a coin toss, right? Once it goes to the courts, it can go one or the other side. You may have a compelling position, and you may have all your documents in order. It still may go the other way around. But based on this, it's what it says: failure to make that deposit, in this case, damage would not automatically be set. Now it goes to what are the damages, and now the seller has to provide and articulate their position. Well, judge, this is what I've been damaged. I lost, a month of my mortgage that I thought I was going to sell, but I had to make another mortgage, and that mortgage was $3,500. Now I lost my deposit on the purchase of my other house that I, couldn't perform, and I have released all the contingencies because, the buyer likelihood was gonna close on my house, and that didn't happen, and I lost my $50,000. So now on top of the amount of my mortgage and the deposit, now I'm $60,000 in the negative, right? Well, believe it or not, the judge can put a demand that the buyer did fail and did not perform, and the seller was damaged. So the seller can be awarded, that amount or some of that amount. So again, this is why it's very, very important that you keep all your ducks in a row and that you keep paper trails, so that way, in case you have to go in front of a judge, the seller or the buyer has the proper documentation in place. Okay. The damages amount, such as the difference between the contractual price and the price. Oh, the other thing too is the seller can say, I've been damaged, because the buyer did not perform. Now I'm forced to put the property on the market, but I'm losing 20% because I was supposed to get this amount, and now the market shift, the interest rates went up. I mean, there's so many avenues in how the seller can articulate their position. And let's say that they lost $40,000, $50,000. On top of the deposit, on top of the rent, all that is going to be accumulated together, right? And now they can say $100,000 to the seller, judgment against the buyer. That's why these contracts are here, for that purpose, folks. Even though the buyer was zero deposit, bless you, zero deposit in escrow. As long as they sign the liquidated damage provision, then the seller can go after some type of damages. What happens if there is a signed liquidated damage? Let's see, and no contingencies, and buyer does not make the deposit as agreed, and then cancels in writing without the contractor justification. Since the buyer has already rededicated the contract, and the seller should be able to immediately pursue the buyer for damages for failure to close escrow. However, a more cautious approach is for the seller to give the buyer the demand to close before canceling and bringing legal action for damages, because there is no case interpreting the liquidated damage law under the situation described above. Buyer and seller should seek advice of a qualified attorney, California, I don't know, but a real estate attorney in these circumstances. Again, that's when as real estate agents, we step back and then we say, please, not give you any legal advice, but here are 3 references that you can, or if you have anyone that you like to speak, by all means speak. We'll be more than capable and available to provide you with all the paperwork that we have as part of the file and process. Okay. And that concludes. That is it, folks. The end. So yeah, typical small little lecture like this, 45 minutes into it. But I hope this kind of puts some perspective and some understanding when when you deal with a buyer that is putting a deposit or not putting a deposit. And I'm gonna open it up as well as the pros and cons, right? Your number one goal as a listing agent is what? To make sure that you present all offers to the seller. But with that also, you want to make sure that you explain that to the seller. Here's the price, here's the terms, and here's the conditions. And you might be able to summarize all this as well, folks, okay? Meaning you're summarizing the price, you're summarizing the terms, and you're summarizing the conditions, right? Because you may have 3, 4, 5 offers that maybe the seller is willing to entertain, and now you're sending multiple counter offers, and then from there, of the 5, now you're just entertaining 2, and out of those 2s, whoever the winning buyer is the one that you're open escrow. The pros and cons again is the disputes is when it comes to the deposit. Be proactive, and if you have not and this is where also the escrow company has to be on top of their game too, and calling you, hey Patricia, we have not received the buyer's deposit. You got to be on that phone to the buyer's agent. Hey Simon, this is Patricia with Keller Williams. I just got wind from our escrow that your buyers did not deposit the escrow, has not deposit the money into escrow. What's the status of it? Oh, by the way, okay, I completely understand. That's out of my hands and out of my control. So the seller has instructed me to send you the notice to perform. I'm going to get that signed over. So please, I urge you that you have 48 hours to perform. Otherwise, we're going to cancel, put the property back on the market, and find another buyer. Okay. And by that time, I cannot promise you that seller will be entertaining your client. So be on top of it. Please keep me posted and let me know. Otherwise, unfortunately, we're going to go in a different direction. And again, that's your role, that's your position, right? Now, on the flip side, you're the buyer's agent, right? Now you're the buyer representing the buyer. It's your job is in explaining the process of how this all works. Mr. and Mrs. Buyer, congratulations. My number one goal is to find, identify, and help you get your property that you want, your dream home, your second investment, whatever the case may be. My number one goal is to make sure that this transaction goes as smooth as possible, right? But part of the requirements is that, the buyer also has to deposit in good faith, deposit some money into escrow, so that way we all move. Now, don't worry, Mr. and Mrs. Buyer, you're not going to lose your deposit. As long as you understand your position, there is protection that protects your deposit. But out of that, once we release physical inspections, once we release seller disclosures, once we release appraisal contingency, once we release loan contingency, now you're basically exposing your money, but that's closer to the 17-day period. By that time, you should know if you want this property or if not. If you don't, that's fine. We back out, we cancel, and you'll get your full refund back. But if you continue and at the last minute you don't qualify, you decide to change your mind, I cannot tell you what the seller's mind is. They may want to go after your full deposit. Now we'll fight and we'll, articulate our role and our position, but there's no promise because we have actually breached the contract. So you got to also remember that position as well. Okay, so again, just a synopsis of how this all works when you're dealing with buyers, sellers, and deposits. The importance of the notice to perform, the importance of releasing contingencies, the importance of the demand to close, and the importance of the liquidated damage provision as well, okay? Because all those fall into play in what your buyer's position and what your seller's position. Now, whoever you represent, it doesn't really matter. But what matters is, are your clients happy? And if they're not happy, then you got to make sure that you fulfill those requirements, because then it comes back to you, okay? And I don't want you to be that agent that unfortunately you fail because you were not unsure of yourself, you didn't understand the process, or you just didn't know the contract itself. This is why it's very, very important that you read every line and get a grasp and understanding. Now, I'm not saying you got to be an attorney and dissect this whole entire contract. Learn the basics and the fundamentals of the contract, okay? Most of the stuff was written by attorneys, and a lot of the stuff we're not going to understand. This is why you seek the people that know, okay? You can call your broker, you can call your team leader, you can call the attorneys, you can call even CAR, the California Association of Realtors legal hotline. Anything to do with contracts, they're the ones that created this forms. They're the ones that know better. They're the ones can answer your questions. And guess what? It's part of your member services. It's free. You have an attorney that has your back. And again, be careful what you say and what you do to CAR forms attorneys, because they're really connected with the Department of Real Estate. So don't say something that's going to catch you in a bind. And now they're calling DRE. Hey, by the way, this guy Simon seems to be doing something sharky here, or shortcuts. You maybe want to investigate. And again, you don't want to be in that position. Again, just being proactive and being open about it. Make sure that you seek the right people. I'm here for you with any questions or any concerns you may have. And my number one goal is to help you close the deal. So with that being said, I thank you and I appreciate you all. Have a phenomenal afternoon. Stay safe, stay healthy, and I will see you on our next call. Bye for now. Thank you.
Thank you, Simon.
Thank you, Hope. Appreciate you being on the call. Thanks, everyone.
Thank you.